This video is for Business Math, Chapter 22, Property Insurance, and this is the first video lecture I'm going to make. You will not see my face in this video. We will see how it goes. I may see my face in some videos in the future. So, again, this is Chapter 22, which begins on page 466 in your book. If you would like to look that up, maybe take some notes. It begins on page 466 there. So, when you watch this, you should have already gone through on the Quizlet that I sent you for Tuesday, and you should have already been reviewing some of those terms, or at least looking through to get familiar with those. We probably will be doing a little bit more with those, but because of that, I'm not going to go over those terms in depth with you today. We're just going to kind of talk about insurance. I'm going to talk about the terms, but we're not going to do a lot of work with those. So, this whole chapter is really talking about home insurance, insurance on business buildings, so like a grocery store or whatever, and cars. So, in this video, we're just talking about like home insurance and just standard property insurance, okay? Tomorrow we're going to be talking a little bit more about auto insurance and other stuff. So, did you know that South Dakota is one of the lowest places for auto insurance? I think, I'm going to have to pull out my my car insurance policy to show you guys so that you kind of get an idea what that is. Kind of like I do with other things in our class, but there's some different tips. We'll talk about that too later. So, here's a quote for you. Insurance companies stay in business because deductibles are usually greater than the claim. So we're going to define a deductible, and we're going to talk about how we do that. So a few terms I did not have on those slides, or on that Quizlet for you. I'm going to just write here so you can review those if you'd like. I'm going to add these to the Quizlet though. So if you didn't see these on Monday, you should be able to see these now. So we've got insurer. This is just the company that gives insurance. Okay. The premiums, those are the fees that we pay. And then the insured, this is on page 465, by the way, not 466, but we're going to be on 466 in just a minute. Insured are the people that buy the insurance, or the people that make the claims and stuff like that. So we're going to talk about different options for insurance and how we can use that. So anyway, we might ask, okay, why insurance? Of course, I may have told you this before, but I was in a meeting with some people, and it was about some insurance things, and one of them looked at me and said, I don't feel like I really need health insurance until something bad happens. Like, they were using that as an excuse maybe not to have it, and all that I could think in my head was, well, obviously, like, that's why we have insurance, is first when something bad happens. And a lot of times, you can't get insurance if you have for certain things, if you have that pre-existing condition. So, for example, I may have told you, I had a friend who got pregnant, did not have health insurance, and could not get health insurance that would cover the baby. Now, there are some low-income situations that you might be able to, wiggle something around there, but typically you can't get health insurance if you already have a pre-existing condition. So if you go to the doctor, you don't have health insurance, you find out that you have a disease of some sort, like long-term, I'm thinking like maybe cancer or something similar to that. The insurance companies are not really going to want to pick you up at that point, because they're going to be paying out of their pocket, kind of looking at that. So health insurance is important to have. Same with like car insurance. If you don't have it, I think you actually have to have some sort of health insurance in the United States, and I believe they do fine you if you don't have car insurance. I could be wrong on that. Don't quote me, okay? So anyway, we really only need the insurance that's going to, that we're really going to need. Excuse me. So they do have this thing, they call it over-insuring. So for example, this is in your book on page 466 if you're following along, but it says here that someone may need a glass coverage for his business, right? So say a business like the grocery store that has these big glass windows on it, okay? They might want some insurance there because they can't afford to replace those windows. So say it's $1,000, $1,500, $2,000, I'm not really sure, but if you can't afford to replace that, if it breaks, you might want to get some insurance that you're paying a little bit every month on. But the other person who can actually afford to replace that could get rid of the glass coverage, pay a lower premium, and take chances on that. So, I mean, if you put aside money to repair something or whatever, you could go with a lower insurance amount. You don't really want to be overinsured because you're just paying out of pocket then for something you don't really need. Okay? Typically, policies are for like a year at a time. Auto insurance is for 6 months at a time. That's pretty common. And premiums are due at the start of a policy. A lot of companies do let you make monthly payments. I know mine's set up to make monthly payments. My insurance company doesn't make me pay more if I pay monthly. Some insurance companies do. So that's something you really need to look into, okay? And let's see. Yeah, that's about it for that. Okay. So the next thing is we need to make sure that we know what we're covered for. So when I bought home insurance, I need to know exactly what I have coverage for. For example, if a tree falls on your house, okay, if I have a few big trees in my yard, if one of those trees falls on my house, I need to know if I can be covered by my insurance. And I honestly don't know what mine says right now. But you want to make sure that you are aware of the terms of that policy. Why would you pay for something that you don't know the terms of, right? Okay. So this is where we get into some of those terms. So we need to know what hazards we're insured for. For example, in South Dakota, you might want we wouldn't need like hurricane insurance, right? Or earthquake insurance or something. And I'm going to pull up tomorrow. There's a cool website if I can find it that kind of shows different insurance premiums in different parts of the country. We'll have a discussion about that a little bit. So, yeah, know what your home is insured for. And like fire, that's something that happens everywhere, right? Hurricanes don't happen in South Dakota. Earthquakes, I mean, we might feel a tiny bit of one here, but it's not like it would be if we were in California, for example, or maybe like Hawaii with flooding and stuff like that. Some homes in Selby flood a lot in the spring when all the water comes up, especially last spring. You need to know if you are insured for flooding or not. If my house flooded, it would be a really bad deal since I don't have a basement. And I actually should look. I'm telling you to do something that I'm not even sure if that's covered on my homeowner's policy. Anyway, moving on. Some policies go off of replacement cost. For whatever item you have, whatever piece of property you have, and some are just the value. So for example, my leather couch, if I paid $1,000 for it, okay, that is the value. Okay, to replace that, so say I bought that 5 years ago, to replace that, maybe today the cost has gone up and it's actually like $1,300. Okay. It depends on what my policy says. So, for example, if my insurance company said, we're going to reimburse you for how much it costs to replace that item, it would be this $1,300 that they would give me. If it was the value, then they would give me the $1,000. And if there's a deductible, that would be taken from something there. We're going to look at some examples here. So, first example, your carport is damaged. You built it 15 years ago for $3,200. Because of its age, it is worth only $2,500. To build you an identical carport today would cost you $5,400. You have a $500 deductible policy. What will you receive if the reimbursement is based on A, replacement cost, and B, value? So for replacement cost, it is going to cost us $5,400. And is that it? Okay, does this deductible pay into that? So we actually would have to subtract the $500 deductible off of this to see what we would receive. And remember, this is replacement cost. So $5,400 minus $500 puts us at $4,900. And this is what they would pay out to you, okay, for replacement cost. For value, okay, our value has definitely deteriorated, okay. We are looking at it being worth $2,500 today, okay. We do have to subtract that deductible out of that one too. And in this case, they're only going to give you $2,000. So you can see there's like a big difference in this here. And it just depends on what kind of policy you have, okay? Are you going to be paying or getting paid $4,900 to replace most of your property, or are you going to be paid $2,000, okay? You'd have to come up with that extra $2,900 somewhere, somehow, to rebuild this. Let's look at another one here. Going back to that one, though, quickly. If you didn't have the deductible on here, you'd just be sitting at $5,400 and $2,500. They don't do anything else with that. They're just looking at cost and value, okay? So, ABC Insurance Company cancels Michelle Schreiber's policy based on an annual premium of $280, 218 days of protection before cancellation, and a 365-day year for prorating. What amount will be refunded? So they're saying in 1 year, she was paying $280. Okay. They canceled her policy. I did have this happen, actually. I switched insurance companies like close to the beginning of this school year. And I don't remember if I talked to you guys about that much, but I switched for homeowners, car, and life insurance over to a different company. All three were in the same company. I switched them to a different one. So I did actually get some prorated stuff. And I think I got a check for like 10 cents or something like that. I don't remember. It was a ridiculously small amount. But anyway, when they prorate something, they're taking the annual amount, and then we're going to multiply that annual amount by how many days you used it, okay? So we have to multiply this by, we use it 218 days, right? 218 days of protection out of 365. And so this is how we prorate things. The annual amount, let me get my calculator out here. So 280, we want to multiply that by our 218 over 365. And you should get 167.23. And that's actually how much she has used. So we need to subtract this from 280. To get our total here. And we should get $112.77 will be her refund. So make sure you're reading the problems here. This one's asking how much is going to be refunded. And it is that $112.77. Again, if we go through this, we take our yearly cost. We multiply it by how many days we used it out of the total days. And we subtract whatever this is. So this is how much she still owes right here. Or how much she has used. Okay. We subtract that from the annual premium to get her refund right here. Okay, I know that there was some terms in your Quizlet today or Tuesday, excuse me, about being overinsured and underinsured, or maybe just underinsured on there. So if you are underinsured, okay, or your property is underinsured, you might only get part of your loss taken care of. And this is where, there's a lot of hoops you got to jump through with insurance companies and stuff. And some of you may have done this already, or you've seen your parents do this with insurance companies. I think like last year, a lot of people had crop insurance, farmers, a lot of you maybe had insurance adjusters come out to your place if you had a lot of flooding or something along those lines. So that might be something we'll talk about in a discussion too. But if you're overinsured, so if you're underinsured, they're only going to pay part. And if you're overinsured, okay, if you have too much coverage, they're going to pay based on how much you lost, and not how much you're covered for. Okay, so we're going to talk about that maybe, at a later date. But I know that our policies for homeowners insurance, homeowners insurance does include like personal property inside your home. So for example, my leather couch would be covered under my homeowner's insurance property or policy if my house burned down or something. Okay. But I think they require that you're insured up to a certain percentage of how much your home's actually worth. So that's where you have to go through the whole getting your house appraised or assessed, or however your insurance company does that. So anyway, that's it for today. And your homework, I believe, is numbers 1 through 6 on page 79 in your workbook. Again, if you have any questions, send me a text, send me a remind. Make sure you're in Remind so I can send you messages. And you can also shoot me an email. We can meet on Zoom if you feel that you need to. Okay, have a good day.